Hey everybody, it's Bruce here with Stock Markets with Bruce. Welcome to my channel and this video. The video today is all about Tesla. The folks at the S&P 500 index made an announcement Friday night that shocked the markets. The fallout still happening. People are wondering what is going on and what did Tesla do. The story goes that right after the close on Friday night, the traders went home for the long weekend, the Labor Day weekend. Here it is, September the 5th, and lo and behold, the S&P 500 people came out with an announcement. They announced the companies that are leaving the S&P 500 and the companies that are going to join the S&P 500. And companies leaving the S&P 500, H&R Block, Coty, C-O-T-Y, which is a beauty product company, and Kohls department stores. They're out. Who's in? Etsy is in, a $14 billion market cap company with a price-earnings multiple of 87.6. They're an online seller of handcrafted goods and vintage goods. Teradyne came in. They are a tester for robotics systems, $14 billion value, price-earnings multiple 22.7. And Catalent, a drug manufacturer, $14 billion value, 73-time earnings multiple as well. These are the three that replaced the three that left the S&P 500. But surprise, surprise, Tesla did not get invited into the S&P 500. The indice committee, whoever these people are, have decided that Tesla will not join the S&P 500 index at this time. And we'll have to wait until they meet again, and that is 3 months from now. And I tell you right now, a lot of people on the open markets, a lot of traders, a lot of speculators were counting on the fact that Tesla was going to be included in the S&P 500 index. And it didn't happen. Keep in mind, Tesla's sales are in excess of $20 billion. They're based in Fremont, California. They have factories in California, in Nevada, a new one being built in Texas, one in Shanghai, China, and also building one in Europe near Berlin. They also have a solar division. They have solar panels for roofs. They have a power division. They're rather large, growing dramatically. They're the highest value cap stock in the automotive sector. This company was worth over $450 billion just a few days ago. And yet companies that are only $14 billion in size took the three positions that were made available, and Tesla did not get brought in. That's kind of weird, isn't it? Makes you kind of wonder what are the S&P 500 people thinking. The problem here is that without being included in the S&P 500, a lot of speculators out there were thinking that, come Monday morning, if they were inside the S&P 500, there would be a lot of index funds that would have to buy up Tesla stock to mirror the performance of the S&P 500. Now there's no pressure for a lot of these entities to buy up Tesla stock. Here's a chart from a year ago, last year. Back in September a year ago, the shares were trading at about $250 or $50 with the split that we see here. Shares are hit a high of the $500 mark, but they were as high as $2,500 last week. The company was only worth about $40 billion a year ago. This chart here is a 1 week chart. You can see how on the far left there, it topped out right around $505 a share. Then it backed off right to Friday in the afternoon, way down under 400, but then had a bit of a recovery, closed at $418 Friday evening. Here is a 1 day chart, the Friday chart. You can see how it started off, went down by 10:30 in the morning, then recovered all day long to close out with a gain of $11. But in the aftermarket, take a look at the top right, down $26.82 to $391. That is the reaction of the street aftermarket when S&P did not include Tesla in the S&P 500. There's more bad news, possibly, for shareholders of Tesla. And that is, one, they didn't get into the S&P 500. That means ETFs and mutual funds will not be buying into the stock. Number two, there were insiders selling shares of the company in the last little while. The most notable seller was the second largest shareholder of the company, Bailey Gifford, an investment banker. They were the second largest shareholder, but they dropped about 14 million shares to be now the fourth largest shareholder. They took $9 billion off the table. And the third issue that is now hanging over the stock that will be interesting to see how this plays out is that the company would like to raise $5 billion of fresh cash to add to their balance sheet because of all the expansion that they're doing. And they want to sell stock in the open market to do it. They want to cut a deal, a kind of a bought deal, to sell $5 billion of stock to raise more cash. Of course, you know what that means. You add more stock to the float onto the street, you dilute the company with existing shareholders, with additional shareholders. That could put pressure on the stock. Now, is $391 the low? It was $505 just a few days ago. But keep in mind, 3-4 months ago, the stock was really more around the $200 mark, or $1,000 a share before it split 5-1. So it has come a long, long way. And keep in mind, if they add $5 billion cash into the treasury, sure, they've sold stock, but they've also got $5 billion cash in the bank, and they can turn $5 billion into more than $5 billion. We'll have to see how it goes. Thank you for joining me today for this video with Stock Markets with Bruce. Please consider subscribing to this channel. If you like the video, give it a thumbs up. And we'll keep you posted on what's going on out there. In the meantime, take care, everybody, and we'll see you later.